So that's why you to use zone. So you see now, I'm picking it from this end to the other end. So all this now belongs to one zone of reversal. Because so long, and if you see, they are not coming out of that box. When they get to this box, they must turn back, right? Then another one is just here.
Coach Ismail, please share your screen.
Okay, that's another one there. Oh, sorry. Okay. Now, with these zones, you can actually put this last one also. Because there's a reversal here, and this is the current price. Remember, always cover the weeks. So you see, this is the longest week here. Cover the week. Now, the moment you do this, you have drawn your zone. This is what they call zones, key levels. Why do you do this? It helps you to navigate your trade. Now, but after doing the, what do? Go to a smaller time frame, which is where you do your entries. Either you go to 15 minutes, or you now go to 5 minutes, anyone you like, depending on how you want to take your trade, okay?
Coach
Now,
Ismail,
up
are
to
you
15 minutes now,
sharing
you see that
your
all
white
the
screen
candles
or
are
screen?
respecting that zone. Here now is even consolidating. It allows you to know what to do next. The moment you
Coach
have your
Ismail,
zone,
can you hear
it
me?
allows you to know the direction of the market. It allows you to know what the market is about to do next. Guys, can you hear me? I am sharing a whiteboard. Can you see a whiteboard? Let me know if you can see a whiteboard. Put a 2 in the chat box if you can see a whiteboard. I mean a 2. If you can see a whiteboard, yes, put a 2. That's what I'm sharing. It's not a screen. I only share the screen when I want to show you the chart. But right now I'm sharing the board because I'm drawing. All right. So, all right, good. So now remember what I said. I said the first rule of support and resistance is any area you see that's any area you see multiple rejections. All right, guys. All right, I understand you. So let's say this is a resistance. In fact, let me just tell you this is it. For example, you see price going this way. Let me show you something. Look at this candle. Hope you can see the screen right now, right? So let's say this is a green candle. This is a green candle on his way up. On his way up. Okay? Forgive the drawing. Don't worry about the drawing, eh? I'm using the fingertip. So as soon as the candle gets to this part, instead of seeing a full candle, what you see here is a wick and then a small candle. And then when you see that wick, what do you see again? You see a red candle come down, a red candle, a red candle. Then after the red candle, a green candle tries to go up again. The green candle tries to go up again. And then when it gets here again, it's another wick, come down. Okay? And then you see this like multiple times, wick, wick. You know, a lot of wicks around this area. Definitely, this area, there's something stopping this growth. Meaning something is here that is stopping the candles from moving. And that becomes the resistance. Hope we understand. That's any area you see multiple rejection. Now let's go to the chart now to see what I mean by that. So let's go to the chart. So I'm going to be sharing the chart now. So this time around, I'll share my screen. So you know what I'm saying. I'll show you a real life. Let's go. Let's just go to. Okay, let's do use. Let me delete this one. Let's use another currency. Which one should we use? AUD, USD. Let's check out AUD, USD for an example of a multiple, what we call multiple rejection area. That is where you see prices being rejected multiple times. Okay. Okay. All right. Good. These are clear examples. Okay. Guys, see what I'm talking about? These are clear examples. Can you see what I'm talking about? Now, see this price. Can you see all these prices? Can you see all these prices? Can you see them? Now, look at what is happening here. See, the journey started from here on this way up. What happened? Got rejected, came back as red candle. Then went up, tried to go up again, got rejected, came down again as a red candle. Then each time they go up here, they get rejected, rejection until they start coming down. Any area you see something like this, definitely is a key level. Is a key level. So you draw your key levels here. Like me, I will even draw it as low as this. So you can touch, because the more candles that are touched by your key level, the stronger it becomes. The stronger the zone becomes. You get, so these are key levels. Okay? Because it's a multiple rejections here. It's not allowing it to go. Sorry. It's not allowing the prices to pass that area. I mean, sending the prices down. What is going on? Okay? So let me shrink it so you see what I'm saying. Can you see what I'm saying now? Do you see that as a major level? Should I prove it to you that it's a major level? Let's go to the past. You see that it must have happened before in the past. Do you see what I'm saying? Oh, what is going on? Oh, I'm coming. Go up here. I hope you're getting what I'm saying. Look at this. There was a rejection here in the past also. If we still go further, good. You see? Now we're coming to this part later. See here too, there's a rejection here. Can you see it now? Even here too. Rejected on its way down. So that's one way of getting key levels. Any area you see multiple rejections, definitely is a key level. That area is an area of interest, area of value. Area of value. So you see, I didn't see all these ones before drawing that line, right? But after drawing that line, it's why is it kind of correlating with the past events? I mean, it's happening the same thing is happening again in the past. Do you get? Let's check another example. One more example. Let's go to let me remove all these ones. Let's go to another pair again. Let's go to another pair. GBP USD. So the first rule, or the first way of knowing a key level is any area you see multiple rejections, where the prices are rejected several times. They are sent back. They try to pass, they send back, and then you see, and multiple rejection means multiple wicks. You see wicks, what we call wicks. Okay. Let me start from the beginning, the recent one. Okay, like here now. Let's look at this. Guys, let's look at this one. Do you see multiple rejections here? Yes, I'll show you. Let's look at all the rejections that we see. Can see here. Okay. Let's point them out. Guys, can you see there was a rejection here? Rejection here. Rejection here. Can you see rejection here? So there's something here that is stopping them, right? So that thing that is stopping them was invisible before. You now make it visible. You make that thing visible, and that becomes your key level. Now, how do you know if you are right? How do you know if you are correct? Because it's always good to confirm if that level is correct. What do? You go back to the past. Has it happened before in the past? That same area. Can we see it? Do you not believe me? Look at it. Can we see that? In the past. It has happened in the past. Can you see it? Now, the more of this kind of event that happens in the past, the stronger that zone. The more of this kind of thing you see in the past, whether they be stopped in the past, the more prices that are being rejected in the past by the same zone, the stronger the zone. Okay, so that's the first rule. Any area you see multiple rejections becomes your key level. Now, let me confirm if we are all aligned with this one. If you understand this part, can you put a 5 in the chat box? Put a 5 in the chat box if you understand the first rule, multiple rejections. The first rule to drawing your support and resistance level. The first rule to drawing your key levels. Any area you see multiple rejections. And how do you know multiple rejections? When you see prices hitting a stop and coming down, and you see wicks on top of them, then it can happen both ways. Okay, good. I'll give another example for a support. That's the resistance. Go for support. So you don't think it's just resistance. Yeah, so you all understand that. Okay, let's take one more example for support. You know, we've been doing resistance. Let's do support. Okay, not far-fetched. What's going on? Support is not far-fetched. We have it here. Let us go far. Sorry, a call came in. I'm sorry. I hope you can hear me. Let me see if you can hear me. Oh, shit. All right, good. Can you guys hear me? Please, you can hear me. Put a 1 in the chat box. Sorry, a call came in. It's not supposed to happen. All right, thank you. Good. That's all I need. Sorry, 1 minute. All right. Now, look at this guy. Can you see this part? Can you see rejections there? Remember, how do you know a rejection again? How do you know rejection? Let me zoom. Multiple rejections. Let's look at them. Look at it. Here, this price tried to come down here when it was on its way down. What happened? It got rejected. How do you know it was rejected? When you see a long wick, wick means the line, what's it called? The red candle was here before, but because of the rejection, it got pushed backwards. So you have a wick. What happens? Here also, rejection, 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 rejection all over here. So what do? The rejection was invisible before, you make it visible, and you draw your line. Oh, sorry. You draw your box here. What is going on with my box here? It's not working again. What's going on? I'm coming, guys. I don't know what's going on with my box. Why are they not working? My two boxes are not working. Sorry, let me refresh. What is this? Sorry, guys. I'm having technical issue here. Okay, all right. All right, guys, can you see this? So this is the same for support as it is for resistance. So meaning it can be both ways. Why I'm doing this is so you don't think it's just one way. Okay. So these are your key levels. So that's how to know key levels. All right, let's go to the second rule now. Let's go to the second rule. Now the second rule is any area where you see price move away from a swing low or swing high. Any area where you see prices move away from the swing low or swing high. Let me show you what that means. Now, for now, I'll be sharing my whiteboard again. Let me share my whiteboard. All right, crystal clear. I like that. Let me share my whiteboard now. That's second rule now. Any particular area where you see price moving away from a swing low or swing high. What do we mean by swing low, swing high? Let me show you what we mean by swing low, swing high. So let's talk about a swing low. A swing low is when you have bunch of red candles coming this way. This is what they call swing low. A momentum ride like that, downwards. You understand? Okay. Now, the moment you see candles coming down like this, all of a sudden you now see one green candle, one long green candle taking off from there. This area becomes what? This area becomes a key level. That's for a swing low. Now, talk about swing high. What's with the swing high? Clear my drawing. Swing high is if you see a bunch of green candles on their way up, I mean, sometimes they have little red candle in between them, but you have more of green candle as it's just going up like that. Okay. And then all of a sudden, let me draw one more. Then you now see one red candle taking the whole thing backwards. One long red candle. This happens mostly when there is a news or there's one sentiment in the market. When this happens like this is swing high, and then price. This price moving away from swing high, coming downwards, running away from the swing high. So this becomes the key level, resistance. All right. So I believe you understand that now, right? Let me share my board and I will go and show you on the chart. First of all, let me ask, do you understand swing high, swing low? Do you understand the second rule? If you understand the second rule, can you put a 3 in the chat box? If you understand the second rule now, put a 3 in the chat box. The second rule says, when price move away from swing low or swing high, Good. So you understand. So let's go and check it out on the chart. Why we need to check them out on the chart is sometimes when we draw them, they are not as, you may not recognize them when you see them in the chart because they may not look perfect the way you see it in drawing. So let's go to the chart and then so you can get familiar with it. I've seen one now. All right. All right. Want to talk about key levels? Oh, what the one? So this is, see this? Can we see this part? What happened here? Okay, no, not this one. I won't use this one. This one is swing high. Okay, I'll use this one. Good. So I'll use this one. Now, look at this swing low. Can you see this swing low? Bunch of red candles coming down. Same thing happened here. Swing low, bunch of red candles coming down, right? And then just one candle take it away from here, took it away from here. See this area becomes an area of interest. I think the candle was here before, right? So this area becomes an area of interest. Where this happens becomes an area of interest. You understand? Because it was coming down here. It was coming down here, whatever was bringing it down here, and then return from here to go up like this. Then something is here. Now let's confirm whether it's true, whether something is there or not. Okay, remember we're talking about this place, right? This slide. This is where we're talking about, right? Here, right? Okay, let's see if something is here truly. Go back to the past and see. See that we're right. Something is actually here. Look at how many rejections that happened here in the past. Can you see it now? So that's another way of knowing key levels. Okay, can you see it now? Can you see it now? Something was here, right? Let's check another one. Let's check another pair. Let's leave Euro, GBP USD now. Let's do gold, Mr. Gold. It's that time I deleted all my drawings here. I want to start afresh on Monday. Oops. Let's see. Let's look for a swing high, swing low. Oops. Good. I think we have one here, but not as I want it to be, but I can still call it one. Okay. So this is swing high. This is a swing high. That's why I even chose gold, because they always have that kind of swing. Can you see what swing high is? On his way up, swing high. And as soon as it gets here, what happened? Price ran away from that area. Something was on his way up like that, so strong. Look at this, very strong. And when it got here, what happened? The price ran away from here. So what is that telling you? There's something here. There's one spiritual guy here that is stopping the whole price from going forward. Whatever it is, we want to reveal the secret. By what? Exposing the visibility. It wasn't visible before, we make them visible. So always start from the weak. Always start from the weak. And then you bring it down. For me, I like to bring it down here to the double bottom. Double top, sorry, to the double top here. So make sure it's always accurate. So you can zoom later and make it accurate, right? Okay. Now, how do you know if this is right? I'm sorry. Let me take some water. How do you know this is right? How do we know we're doing the right thing? How do we know? You go to what? You go towards your left, which is the back, the past. You go to the past and see if that area have stopped prices before. Oh my God. Can you see that? It's a very strong area. Look at stopped, then broke this side. But after that, as in it was coming like this, came down, got stopped, came, got stopped. You see that? Let's go backward again. Let's go backward. There must be something. Gold is very funny. Gold goes up and down, up and down. That's why gold can make you rich. And if you're not good, you don't know what you're doing, it can also make one poor. See, the same way it makes you, it gives you money. If you don't know what you're doing, you can take it back. I mean, I love trading gold actually. If you want to be rich very fast, I mean, you want to turn your $500 to $10,000. Gold is the guy for you. I always tell people these stories. How greedy I was that time. In a particular day, less than 4 hours, I had $1,000, $1,020 or thereabout, $28, yeah. And I moved from $1,028 to $4,740. That's $3,740 profit in the single day. And see what greed did to me. I was so happy that 3,740. Multiply that. Then I think dollar was about 450 or something, 5 something. So it was 5 something or 4 something. I can't remember. That was last year. Last year, October to be precise. Guys, you know what happened? I was so excited. And in my mind, I said, let me round this thing. Let me just round it up to 5,000. As if I'm the owner of the market. And that excitement, I was going to go for a sell. I went for a buy. And I went to the mosque. By the time I got back, gold did not just take the profit he gave me before. He took the one I brought to the market. That day I was crazy. As in, I hated myself. But I didn't blame the market because I blamed myself. But some people, they will blame the market. They say, hey, this is it. I'll stop trading. Say, what happened? Forex took my money. They won't say they were the one that was greedy. Anyways, that's by the way. Just telling you, at least now we know, right? I think with these few points, I've been able to show you that another way, the rule number 2, which is when price move away from swing high, swing low, it makes that zone valid zone, and that becomes your key level. All right. So let's go to the third one. Okay, before I go to the third one, let me ask you again. So if you understand this second rule, can you put the 4 in the chat box? You understand the second rule? Price moving away from swing low, swing high. Put a 4 in the chat box. Thank you. Keep it coming. Keep it coming. You are 14 of you in the class. Keep it coming. All right. That's good. This is suiting. Now, we have the third rule. Yeah, keep it coming. Keep it coming. The third rule. What's the third rule? The third rule is, I want you to write now. Any level that has acted as both support and resistance is another way of knowing your key levels. Any levels that have acted as both support and resistance is also what can be called a key level. Now, let me show you in drawing. Then I'll now go to the chat box again. We'll look for something that relates to it. Now, when it comes to trading, you don't see things automatically. But do you know that's the beauty of it? When you don't see something you recognize, you don't trade until you see what you are looking for. Then you trade. So that's why I say set up. So these things are things that you know now for key levels. Now, if you don't see them, you don't trade yet. You don't force them to come. Sometimes when we don't see key levels, we just want to trade by all means. Anything you see, you now assume is key level because you just want to make profit. And then you will now regret that, why did I do this? So now, the third rule is what? Any level that has acted as both support and resistance, okay, is a key level. So what do we mean by that? Now, let's say there's a trader, let's say the chart is coming this way. What am I doing? Let me start with the uptrend. Goes up like this. Okay. And then it gets to this part, goes up like this. Now, here, you now see a resistance here, stopping this price. So, meaning I have to clean this one. Oops, what am I doing? All right, let me just do it again. I think the razor is big, too big. So you have the price going up, and it got here, and it got to this part, right? Now it stopped here, right? So as it got stopped here, it went down. So going down means It now went up this way. It broke here. And when it broke here, it came down and then came down and then up. So what you see here now is this. You see that this same line now has acted as what? Resistance. Why is it resistance? Because it stopped this one from moving up. Stop this side from moving up. These two areas, they were being stopped from moving up. Then finally, when it broke, it also acted as support. So it makes this place as support. They sat on it. This one, they sat on it. These two sat on it. Why this one was stopped by it? So here, these two made it a resistance. These two made it a support. Anywhere you see anything like this, you draw this line. That's the key zone also. Let's go and look at it from the chart so you understand what I'm saying. Yeah, break and retest. Yeah, sharp. Sometimes it may not be break and retest. It may be a future and a past thing. Okay, let me show you now. For example, let's go to something else also. Or we can just use gold also. Okay, let's just use gold. So instead of why I like to go to different places is, hey, you know why I don't call it break and retest? Is sometimes, let me give an instance. Here now, let me remove this line. Let's assume we've not been able to draw any key levels. So let me look here. Here now, you see that prices have been stopped from going up here. So what do? Let's mark those ones. Let's mark them. I mean, break and retest also works for it. I'm just saying that it's not limited to break and retest. You understand? You are right about that. I'm just saying that, for example, now look at here. This is the resistance. Okay. Oh, disappears. I mean, I still need you. Okay. So now look at here. Why are you flying now? Stop flying. Okay, let's come here. Here now. Oh, okay. I think I have to use something else. Don't worry. Let me use let me just use the annotation. Okay, guys. So here now, let's start again. Here, resistance, right? Here, support. So let's bring a line. Let's bring something here. Let's bring the line here. If you bring this line and you put it here, here is acting like a support, and here, okay, still a support here. So, okay, still a support here. Now let's check. Let's check in the past. Sorry, still a support here. Support here now is the resistance. See it here, resistance. Here, support. Support means it's sitting on top of the line. Why this one is being stopped by the line, right? So that makes it a zone also. Let's keep going. Here now, support. 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 I'm looking for one more resistance. And then we're done with this one. Oh, okay. Trading view. They're increasing this every day. Okay, look at this support, resistance, resistance here, support, resistance. So this is what they mean by that. Okay. And now this line, this one that is coming down now that you see here, may still come back here and probably test it before coming down. So that becomes another resistance. So that's what we mean by a line that you see that have acted as support and resistance in the past is also a key level. So in other words, like I think that was Daniel, right? Like he said. So you see, um, so what he's trying to say is this line can act as a resistance and also break here and retest this place and be a support. Do you get? So when you have things like that, then that's another key level. That's what a key level. If you understand this part also, can I see your fire emoji? This time around is what I want. Fire emoji, right? Give me fire emoji if you understand this last one. Yeah, fire emoji. I mean, that's the third rule now. You know, when you know all these rules, there's no way you miss any key level when you are taking your trades. Now, the last one is that's the last one is whatever key levels you are drawing, they must be close or they must be near to the. I mean, they must be near the current price. I mean, if you are drawing support and resistance, don't draw it far away from the current price. Don't draw it far away from the current price. Quickly, let's go to the chart. We don't need to draw this one. For example, now let's say let me use another pair. Let me use another pair. Let's use another pair. Let's use DXY. Almost having the same power, what's it called? The same structure with let's use Euro USD. Oops, daisy. So with this one, we'll be done with key levels. We'll be done with key levels. The remaining one will now be practice on the job training. You guys will now be practicing key levels, okay? Now, what's the last rule now? The last rule is if you are drawing your support and resistance, make sure you are not going too far away from the current price. Where is the current price? You see, I used to make this mistake as an amateur trader. Well, I'm still learning though. I don't want to call myself full blown. Okay, but I used to make that mistake. See, this is the current price, right? Can you see the current price? Anything you want to draw, don't go far away from here. Because now let me show you. You know, those days, if I want to draw support and resistance, you know what I'll do? I'll do it this way. I'll bring it this way. I can start from here. You see this? You see this height now? Can you imagine how much I suffered? I'll be giving myself. You'll not be waiting for price. This will not come to your zone. So see me now. See a professional trader. You know, I'll draw it like this. As I did, I didn't even know that you are supposed to be drawing a box. I always draw lines. Can you imagine what I'm doing? Do you see what I've just done? I'm drawing the support and resistance. My support, the resistance I'm drawing, not that it's not valid, but it doesn't concern the present condition of the market because the price is far away from that area. Do you get? So if you look at the dates, the dates where I went to choose my own, what's it called? Support and resistance, right? Look at it. That's 6th of October, 2022. Meanwhile, I'm trying to trade on 14th of October. So why am I there? What am I doing with this one? That's the question you ask yourself, right? So what do? If you want to trade today, you make a new analysis that is close to the current price. So this is it now. Where's the current price? This is the current price here, right? This is the current price, right? So what do? You can now do your support and resistance around here, your key levels. In fact, you can do this. I will do it this way. Can you see it? Let me come. Where is this at? Okay. Let me remove the extension. All right. This is what I'm doing now. Now, if you do it this way, I'll tell you what will happen. It makes the price to get your entry. You clear up your entry and all that. Okay. So now I'm drawing the second one. Okay. Now the second one on the base here. Now you see, I've captured that market as it is now. So right now, whatever the market is doing, I know that I'm going to be looking at it, so I can check it, take my trade at 5 minutes, or 15 minutes, either one. So when I come to a lower time frame, it tells me what is happening. Now that I have this one, I can now wait for, what do you now wait for before you take an entry? You wait for confirmations. And what is the confirmation again? Remember what we did the first time? The candlestick pattern, right? If you look at this one now, first of all, you will know that, what is this one called? I want you guys to type it. Don't look at your note. What is this? Sorry, I want to see your answers. What is it called? I know, sharp guys. Good. Bearish engulfing. So do you know what that means? That means you are not to take this trade yet, because that means the next candle will be red, meaning this price is trying to come through this line. So you want to see what will happen first. Either it has enough momentum to cross through, or it will be sent back again. So if you send back, the kind of candle pattern that will come determine whether you take a buy. Okay? So you now check if let's say it comes here and then it's been sent back, and you now see bullish engulfing. That's where you put your price, and then you activate a buy, either market execution, which is good at this time because you don't want to do limits. You don't know. You want to see what happens before you take the trade, and you take it for a buy. But if it breaks through this zone, then you wait for a retest. Then if you see a retest, the candle formation determines the candle pattern. If it gives you evening star, what does that mean? That means it's going for a sell. If it gives you a morning star, meaning it's going back up. So that's how you confirm. Now, if you see, when I talk about confluence now, number one, if you see, let me give you an instance. If you see a bearish engulfing candle, okay, and then a support that turns to resistance. So if you want to take this trade now for a sell, what are the confirmations? Confluence with it. Number one, this bearish engulfing. Number two, you want the trade to come this way, break this thing. When it breaks this, the support now turns to what? Resistance. There's a retest. That's how many what? That means it's the second confirmation. Then the third confirmation will now be, you now expect to see either a little consolidation that give you an evening star, or another bearish engulfing, or anything, any candle pattern that is for a downtrend. When you see that, then that gives you the confirmation candle. You take a sell. That's how we take trade. No, you don't take trade based on just candle pattern. It becomes the confluence. So what's the confluence here now? A bearish engulfing plus support turns resistance plus retest plus a candle pattern that supports a bearish movement. You see that confluence now? There's no way. If you use a confluence like this, at least out of 10 trades, you should be getting like 8 wins. Okay, and you know in forex now, if you have even 7 losses, 3 wins, you are still in profit. So don't talk of you having 8 wins and 2 losses. Am I making sense at all? If I'm making sense, please tell me. I mean, don't patronize. Just tell me the truth. Give me honest feedback. Does this make sense to you? It's making sense, right? Good. So, but don't worry, we're still going to be talking more on entry today. Okay. So now we've talked about the rules. Those are the rules of checking your support and resistance. Okay. Now, So the warning, I want to set some things for you. So before you take, now we're getting close to taking entries now. You understand? When it comes to support and resistance, when you want to take entries, okay? So when you want to take entries, you always want to know what the candle is doing first before you take an entry. Let me give an instance. Imagine, I want to, let's assume something now. Let's just assume something, okay? Um, okay, let's assume we didn't know what is here now. Let's say we did not know what is here, but this is let's say this is the current price. Guys, look at it. Let's say this is the current market condition right now. Let's say you are here, you want to take this trade now. You have drawn your this is your resistance box, this is your support, and you want to take a trade. And this is where the current price is. In fact, not here. Let's say here. Now you see that is a downtrend. Are you supposed to jump into this trade? You know, some people who are mature will say, wow, okay, so this thing is coming down. Oh, maybe it's still going to form more red and go down. Let me jump it. They just write enter sell. Let's say this is where the market is now. You now enter sell. As you enter sell, what do you notice? What happens again? Bam. You see? Market start buying. So when it comes to after drawing your key levels, these 2 key levels, you don't just jump into trade. Now you now wait for your entries. Now, how do you take your entries? Remember, I said confluence. What are the confluence? Now, let's say you are here now. Now, you can't take any entry here because you don't know what is going to happen next. Okay, you see a candle that is coming down and it got rejected. Look at the rejection, so long. This is already giving you a hint that this thing is going to buy, it's not going to sell. You understand? This is what? A rejection. Who knows the name of this candle? The name we gave it yesterday. Let me see if you guys are actually following. What's the name of that candle? Not really. Yes, you're right. In terms of the name of the candle. Okay, somebody's already said it. BP, buyer's pressure. Yes. So meaning the sellers is trying to come down, the buyers put a pressure on it and send it backward. Oh, guy, you do the pass. You're not going anywhere. So that's buyer pressure. And when you see buyer pressure, you know, it's not like somebody coming to town. Imagine somebody coming to your hometown and beating you in your hometown. That means that person is very powerful. It means if you come to that person's hometown, you beat you double. Because this your hometown is beating your hometown. So if a candle is already a red and is already a downward trend, and as it's coming with a momentum, and another candle now pushed it backwards, that means that candle that is pushing it now is having more power. So the next candle is going to be that candle that pushed the candle backwards. Now, but you can't predict. Remember, when you are in the market, another thing you must not do is don't predict. You are not a gambler. You only react to the market. You don't predict the market. You can't say, oh, now the next thing is, I think the next thing is this market will now go this way. No. Your job is to wait, let the candle close. That's why I say at the close of every candle is where you take any action. Because the way the candle ends determines the next move. Remember, we are trying to study the candlestick pattern, right? So the way the candle ends is what determines the next action. So you react to it. You know, react means there must be an action that will happen. Then you now respond to that action. That is where they get the react. So you don't predict, you respond to the action of the market. Now, how do you respond? Now I'm here now, I want to take a trade. I'm lost. I don't know what to do yet. And I'm not supposed to know. So my job is to wait and see what's going to happen. So how do I wait? So let's say the trade now starts coming. I'm waiting for things that I know. I'm waiting for my setup to happen. So now I've seen a rejection. That's number one confirmation for me. Guys, you write it down. Number one confirmation is rejection. Number two is support. So a support and a rejection, remember, what did I say about rejection? Anywhere you see multiple rejection, means the key level. So that means because there's a rejection, this key level is valid. And what kind of key level is this? If it's the support only supports what? Uptrend. While resistance supports what? Downtrend. So if the support is sending this candle backward, I'm giving you all the confluences. So number one, support area, a price is rejected, which means it's a red candle that's rejected. So support area confluence number one, a red candle be rejected, which is BP, buyer's pressure, confluence number two. So support plus confluence number two gives me that is an uptrend. But I'm not okay with that. I still need more confluence. So what do I see here again? See the sellers are still trying to calm down. So this, I'm now like, okay, I'm waiting. I want to see what will happen. I need something that will give me a final, you understand, confirmation. So now this is the seller trying to come up, push them back again. Another seller is that coming down again. So probably there's a green candle here, which now the sellers now push the green candle down again, trying to pass, but they could not get there. So what happened next? There's a big green candle beside this one. Now, the moment you see a big green candle at the support area engulfing the red candle, you know that this is a confirmation candle. So what do? The moment you see this one, that's where you place your buy level. You understand? Do you know why? Let me tell you what happened. Remember, I told you that the candle always tells the story. If you look at the story of this green candle, you know that this green candle was not actually a green candle before. It was a red candle coming down. Let me show you the story. So the red candle opened here. Guys, see what is happening. Opening, you remember, a red candle opened from the top and goes to the bottom. The red candle opened there and then made its way. Okay, sorry, guys. The red candle opened here. You know, this last candle closed here, right? I want you to pay attention. This last candle, how can I point it to you? This last candle closed here. It opened here and closed here. Now, at the close of this candle, a new red candle now opened here. This new red candle opened here and made its way downwards. And what happened again? Buyers pushed this candle upward. And this time around, they didn't just push it upward. They pushed it beyond the opening area. And the moment you push the particular candle beyond the opening area, it turns to the opposite candle. Then it became green candle. That is a war that was won already. That is a victory. So it means the buyers won the war. So what happens now? The moment you see that happens, they push this thing and they push it as this high. Then later, sellers push it a bit here and the candle closes here. So after closure, what do you expect? The next thing that will happen is a green candle. So meaning if you take a buy, you see it now, at least you ride it up to this place, and then see it. So this is what happens. Let me show you what happens. This is how you take your entry. I hope you are getting my point. Don't worry, we're going to take another example, but I'm just showing you confirmations that you take. So when you want to take when you see this green candle now, a bullish engulfing, what do? You quickly take your entry. So you drop your entry 2 here, which is the price 2, the stop loss, the whatever. Price here. So let's say you drop it here. Sorry, that's for a downtrend. So you drop it here. Now, see what I'm doing now. So anytime you are doing this kind of thing, your stop loss is always good. At least you put it at the tip of this, at the tip of the wick of the green candle. Okay, and then your take profit. For me, I like to stay at the next key level because there's tendencies that the price may reverse from this key level. Okay, so let's say you put your take profit here. Do you know what happened? Are you going to win that trade or not? You'll win the trade. Why? Because if you look at it now, it will eat your take profit here. Then you have won the trade. And when you win the trade, what do you have? You've won like 20 pips. Am I saying 20 pips? Yeah, 20 pips, right? Yeah, 20 pips. And then you risk like 12 pips. Okay, that's almost 1 to 2. Almost 1 to 2. Okay? Now, so worst case scenario, what I always do is as soon as I'm getting close to this place, I will close partial profits, move your stop loss up. See what I'll do? Close partial profit, move your stop loss to this place, and then take it up to the next level. And guess what happens? You win that too. Before you know, you're already having 43 pips, free of charge. I mean, not free of charge, you did the work, but you make money, right? I know some people are already confused with the pips, right? I mean, but it's okay. So this is how you take your entry. Now, how did you take your entry? That's why they say it's good to take trading journal. So if you have to write down what were your entry reasons, because every professional trader or a trader who knows what he's doing must have reasons. So if you ask me now, what are the entry reasons? Guys, let's list them. Confluences. Number one, what was the first reason? Number one? Sorry. Okay, number one, a rejection of a red candle. Number two, at the support area. Remember, Support is for uptrend, right? So a rejection of a red candle, which is what? A BP, which is hammer, a buyer's pressure, plus a support area, plus a a bullish engulfing. These three equals uptrend. So you take your trade because you have three confluences. You didn't just have one. Three confluences is enough confirmation for you. Take your trade. That's how you make your money. So you write it down. This trade that I made, though, I made it. I took this trade based on the rejection of the red candle at the support area. That rejection of the red candle plus the support area makes it what? A hammer or a buyer's pressure plus a bullish engulfing. So when you write it down like that, next time it will help you to have a record of wins and your strategy. So you develop a culture from that. Okay, don't let us spend too much time on this. Let's go to another one. Let's go to another area. Let me look for a downtrend this time around. Downtrend. A downtrend. Ooh, and it's swing high. Let's look for a downtrend. All right. Let's say, okay, this one is the news. Can't use this one. The news. Let's look for technical. Okay, this is Euro USD, right? All right, good. Okay, I think we have something. All right. Now, so let's say this is where the current price is. Let's say this is where the current price is. Okay. So the current price is here now. All right. So what do I do? First thing, I'll draw my key zone. Where my key zone? The areas that are being rejected, right? This becomes my key zone. Okay. Guys, remember, they said you must draw these close to the current price. Oh boy. Guys, don't be bored though. It's very important. This is how you make money. We're talking about entries now, just briefly, All right. So now we have it here. Okay. Okay, so when you take this and then you come down here also. All right. Now you want to take this trade, and this is the present price. The present price is around this area, but you don't know where this trade will be going next. So this is the present price. It's around this last green, but you don't know where this trade will be going next. You can't take it now, so you wait. So now, as you wait, what are you waiting for? You know that this trade is at the resistance area now, right? So it's moving. The trade is moving now. You wait. You are waiting for it has come down from this area. You want to see at the key level. Remember, I said candle pattern are only used at the key level. Now, if you look at this now, there's rejection. There are rejections here. Where are the rejections? What is this? What have I done? Oh God. All right, let's go check another pair. Took me out from here. Let's check another pair, don't worry. It's even good for us to check another pair, at least. So, okay, let's go back to GBP JPY. Let me delete all of this one. Writing all your questions though, so I'll check them out. As soon as we're done here, consolidation. I'm looking for a downtrend. Okay, this is on 5 minutes. Let me go to 15 minutes so it can be easy to see. Aha. All right. So this is it now. Let's say this is a zone. This is what is happening now, right? And this is the current market. This is the current market price. I don't know what's going on. I'm just here to remember. You are not here to predict. You are here to analyze, wait, and then react to the market based on what the market is doing. The prediction is like gambling. I want to predict where the price direction is going. You are not a fortune teller now. Can you tell what, you know? So I draw my zone. Okay, respect yourself. I'm trying to target that double top, right? Don't worry. All right. Let's just assume this is it. Now, okay. So I draw the other one. Remember, anywhere there is multiple rejection, okay? So there's a rejection here. I start from here. Put this one here. Okay. Now, done. I've done my key levels, right? But I want to enter this trade. How will I enter? Now, let me enlarge it. See too many weeks. Too many weeks. So this is where the trade is presently. I want to know. Now I can't enter this trade yet. Remember, number one, you only enter trades at key levels. And you only enter after you have confirmed with confluence of different analysis, right? So right now, I don't have anything on me to use now. So I have to wait. The price is now moving. The price is moving. So what I noticed, first thing I noticed now is the price at resistance level, support level, we got rejected, got rejected. Okay. See, buyer's pressure, right? And what do I see next? I see a bullish engulfing. Can you see this kind of bullish engulfing? So number one, confirmation, resistance, support. Number two, confirmation, bullish engulfing. And what happened? Let's say I take this trade now, okay, with the bullish engulfing. What happened to this trade? Am I in profit or not? See it. If I took this trade from here, because of this bullish engulfment, though, guys, sorry, bullish engulfing. I can't say engulfment. Bullish engulfing, right? You took it from here. What happened? Did you make profit or not? You make profit at the key zone. Now you have enjoyed that and you have taken your profits for that one. What next? Now you still want to enter this trade. Now you need to enter because this thing has gone into a resistance that you draw before, right? How did you know it got to that resistance? Abba, it's glaring now. It's glaring, right? It was a long marbuzo. Remember marbuzo? A thick, big, green candle on his way up, like he went so high. And what happened after that? Let me show you what happened after that. Let's look at what happened. What happened after that? It got this high, and then later another green candle started from here. Guys, look at it. A green candle started from this place. And then went this high, and then what happened? Seller pressure came in. Remember this candle? What's the name of this candle? SP, seller's pressure. That's another confirmation. Resistance, confirmation number 2. Seller's pressure, confirmation number, resistance confirmation number 1. Seller's pressure, confirmation number 2. Then after that, another red candle after the seller's pressure. Guys, I'm going to be entering this trade from here. If I'm to enter this trade, it should be from here. Okay, sorry. We take it from here. Because of those confirmations. Now, and what happened? Okay, sorry, that's not. and see what happens. Are you in profit or not? Are we in profit or not? So now when you look at this, what do? You bring your take profit. I like to go to, like I told you, I set my profit TP1 to key levels in case you get that reverse. So see what happens now. I'm going to be having 95 pips. Guys, 95 pips. That's a lot of money. They are using one lot size. That is $9,500 if I'm right. One lot size, 95 pips. Yeah, $10. So that's $950. $950, sorry. On this one. Now, as soon as it gets here, I get to my profit and I see that it's coming close to my profit. I close half of it. And what do I do? Do you know why I'm closing half? I'll tell you. So when this price gets, let's say when it got here, it had a retrace. Like me, my normal, if I have a retrace, I'll take another entry at this point, where that retrace is. Okay? And do you know why I'll take the trace? Do you know why I'll take the retrace? Sorry, another entry. Because the candle is still having a seller pressure on it. Look at the wicks at the top. It means this thing is still going down. It's still going down. Then, so if I take another one here, which means I'll take another entry here, another entry here. I'll take another entry at this point. But this is the confirmation, right? I'll take another entry at this point. Make this close my stop loss. Meaning I have two entries now, right? I have one from the top. I have another one from the bottom. So this one now, I'll bring it down to this level. Why this one is still rolling? I close half here, and then I extend this one to down to this level to see what will happen. In case it comes there. If it doesn't come there, I'm still not in loss. Yes, it will roll back. I'll move my stop loss from this one to this side. I've secured some profit, right? Now, but that's not the point. The point is, when do I know? How do I know when to stop? Can you imagine? See money now. Just see what is happening here. Imagine you keep moving. You close half of this one. You move it downwards again. This one, you close some of it. You move it out. In a day like this, you can make $2,000 on this trade. And you know, GBP JPY has a lot of volatility, like very high volatility. And you know, it gives you a higher pips, just like almost like gold and the rest of them. Anyway, guys, what is the point of all of this? The point of all of this is if you take your trade using this confluence of what? Key levels, candle pattern, and then what else again? Eh? Hello? Can you hear me, guys? So when you use all these confluences, it helps you to take in entries. Please, I know this part, if you understand, can you put a fire emoji in the box? The chat box, if you understand. If you understand what I've just shown you, don't worry, I'm going to look for a video that I'll send for. Okay, you watch the video, of course, it's recorded. If you understand, just put the fire emoji, please. If you understand this part. So now, if you notice, to make it easy for you again, we started with what? A candlestick pattern. And in that candlestick pattern, we showed you candlestick pattern that will tell you the direction that will tell you the next direction the market will go. But we now ended it by saying you can't just use the candlestick pattern. You have to add it to the key levels. Then also to other things that we'll be talking about now will be other confluences. So guys, this is what they call trading. So this is what they call this is what they call support and resistance, trading the support and resistance strategy. Okay. Now, apart from trading the support and resistance strategy, what is next? We're going to be talking about price action, and that will be tomorrow, guys. Because really, I think when you make it too long, sometimes you forget the first thing we start with. So if you have any questions, let me check the chat box, guys. Let me check the chat box. Any question? Support and resistance weeks. Yeah, my volume is low. Oh, I didn't see all of this one. So next thing is bearish. Okay, good. You guys are okay. These are responses, right? Any questions before we call it a night? Yeah. Any question? If you have a question, you can raise your hand, then we'll mute you or you type it. Yeah, you're welcome. It's a pleasure, man. If you have a question, just go ahead and ask me, or maybe you chat me later, or you can ask on any group. Yeah. So, but what I want you to do when you get back, make sure the best way to let this speak is you go back to your chat and look for all these confluences back there. Any question? Any question? Okay. In the absence of no question, God bless you guys. Let me allow you. Have a wonderful. Okay, someone is asking. Okay, all right. Let me see. Is currency strength very important? We just using support and resistance. Okay, that's a very good, beautiful question. Beautiful question, guys. Now, guys, when it comes to forex trading, when it comes to forex trading, currency strength is not really a thing. Trend is what matters. You know, why we use currency strength in binaries because it's a 5 minute trade. Trend does not really make sense in the sense that, let me give you an instance. Quickly, let me show you something. Let me show you this. Hold on. Let me show you something. Let me show you something now, guys. I want to share my screen again. Let me show you the difference between forex and then, you know, when you are trading forex, when you are trading binary, the reason why you need strength. That strength you see. Do you know that the current strength meter is only telling you the current strength meter every minute, like minutes, seconds, 5 minutes, and all that, right? It's not really showing you the current strength meter for a very long time. Now, the reason why you need that is this. Let me show you. So let's say this is the trend now. If it's an uptrend, but this uptrend we are looking at, in between the uptrend and downtrend, sorry, in between the uptrend, we have a lot of pullbacks. Now, look at this pullback now. This is 15 minutes candle plus 15 minutes plus 15 minutes. That's 45 minutes, 1 hour, 2 hours, 3 hours. Now, for these 3 hours, am I right? Sorry, 30 minutes, 30 minutes. That's 1 hour, sorry, 1 hour, 30 minutes. For this 1 hour, 30 minutes now, all this candle I'm counting for you. This first candle, all these red candles now that I'm showing you now, is 1 hour, 30 minutes of downtrend. If you are trading binary GBP, JPY, if you don't use the currency strength to know what is the strength of this currency as at this time, oh, it's a downtrend at this time, oh, imagine you'll be losing your trades because you are trading for just 5 minutes, highest 15 minutes. And in that 15 minutes, trend cannot really, is not working for that. Because trend is something that is long term, not short term, right? In between the trend, you see low, you know, you see some low time, some high time, and all that. So all this one you see here, the moment you see this red now, the current trend will tell you GVP is low in terms of strength. So you need strength for binary to know, okay, right now I will do a put on GBP, JPY. But before you know it, in the next 1 hour or 2 hours, you see that current trend will tell you that GBP is coming up now. So you change it, you must do a call. So it's only currency trend that can help you when it comes to a small time trade like binary. But when it comes to forex, you don't need currency strength because currency strength doesn't matter. It's the trend that matters, the trend itself. You understand? Which is a long-term thing. So you want to know the direction. Right now, what is the trend? Is the GBP very strong for like 1 day, 1 week, 1 month? You understand? Depending on what kind of trade you are doing. So currency trend doesn't matter. It's the trend that matter. Okay. So when we say uptrend, downtrend in binary, we're only talking about the currency strength. When we say uptrend, we're talking about these ones. It's not really a trend. It's just this one. All these things you are seeing here. Because we know in the next minute it can be down, next minute it can be uptrend. Okay. So as long as forex is concerned, is the trend that you look at. You don't look at the strength. Yes, thank you for TBX. God bless you. So have I answered your question? Don't worry, when we get to price action, you will know a lot of things. Price action is, let me tell you guys, if you understand price action, all this MACD, I'm not saying they are not good though, but using MACD,
Yeah, Bollinger Band, blah blah blah. They are okay, but current price action is the key. In fact, institutional traders, that's what they use. They don't really use all those ones. Okay. Anyways, we get to that part. That's what we round it up. Then we'll now come to now how do we now harmonize all of these things with our tools? Because if you understand this thing, all these things we're saying, if you understand it well, you'll be making money with all our tools, like Impulse, like even if you are into DCX, you'll be able to take trades on yourself from Swipe Coin Scalper, you know, and then also you'll be able to use the Lauren, be able to use all these things. Okay. When you have a background knowledge in Forex, you will make money, a lot of it from the academy. All right, guys. I think at this point, I've been able to convince you, but not to confuse you, that trading support and resistance is one of the best strategy you can use to make money. At least you have seen all the conferences and you see the way it went. So you just to go and do some back testing, check your charts, and then it will help you to stick. It will help all these things to stick. If not, I'm telling you, you can forget everything we talked about. But if you just go to your chart tonight and back test, so I'm going to give you another assignment, guys. I'm going to give you another assignment. Now, the assignment I'm going to give you now is it still have to do with your support and resistance, but this time around, you should tell me, give me, you add what we call entry reasons. Now, so which means you draw a support, you draw a resistance, then you tell us the candle pattern that is there, as in that will tell you the direction to go, whether to go for an uptrend or to go for a downtrend. Okay, just recognize your job is just to recognize. Okay, let me just make it easy for you. Draw your support and resistance, and tell us any candlestick pattern, a directional candlestick pattern that you see, that you recognize. Circle it out and write the name there, and tell us where you think it will go. That's all. I mean, it doesn't matter even when you are seeing where it has gone already. And just tell us what candlestick pattern made it go that way. That's your assignment. If you don't understand it, you can private chat me also. I will explain. Thank you guys. Good night. Ciao.